Welcome back to Investing Talk Podcast.
Today we're looking at Bitmine Technologies, BMNR. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. The core story here is Bitmine Technologies' aggressive treasury strategy. They're really positioning themselves as a leveraged proxy for institutional crypto adoption.
A leverage proxy. What exactly is their position? I keep hearing about these massive Ethereum holdings.
Yeah, it's pretty central to their whole plan. They've deliberately established themselves as the world's largest corporate holder of Ethereum.
The largest. Wow.
As of late October 2025, they're holding 3.31 million ETH.
3.31 million.
Right, and that gives their treasury a value surpassing $14.2 billion, with the Ethereum part alone worth about $13.8 billion, so almost all of it.
That's massive. Just staggering concentration. And they have this goal, right? Something called the alchemy of 5%. What's that about?
Correct. They are targeting 5% of the global Ethereum supply. This isn't just a number. It's a key strategic milestone for them.
Why 5% specifically?
Reaching that level, they argue, validates their whole crypto-first investment idea. It's designed to catch the eye of major institutional players. Chairman Thomas Lee even kind of links this strategy to, improving U.S.-China trade relations, interestingly enough.
Okay. Big picture stuff. The strategy needs execution. Let's look at the financial performance. How have the numbers looked recently? Is the business actually supporting this huge treasury?
Well, the growth has been, frankly, explosive. 2024 revenue was $3.31 million. That's a 413% increase year over year.
400%, okay.
And analysts are projecting another 110% growth on top of that in 2025 should reach about $7.0 million.
Yeah.
So, yeah, rapid growth.
That kind of high growth often comes with big losses, though. I saw some notes about improvement there, too. Margins getting better.
Exactly. That's the other side of it. While they're not profitable yet, 2024 was deep in the red. The margins are forecast to improve dramatically. From negative 99.4% in 2024 to near break even. Projected negative 2.91% net margin in 2025.
Okay, near break even. That's a huge swing.
It is. Projected EPS is just minus 10 cents. So it looks like that rapid scaling is finally starting to pay off in terms of efficiency.
And the stock price, it must be reacting to this news, this strategy.
Oh, the market enthusiasm is undeniable. Since it listed back in June 2025 at $8 a share, the stock's up over 540%.
540%, wow. And what are the pros saying? The analysts.
The consensus is overwhelmingly bullish. You've got 6 out of 7 analysts rating BMNR a buy.
6 out of 7, pretty strong.
Yeah, and the consensus 12-month price target is $90.
$90, from where is it now?
It's currently around $49.76 as of late October, so that target implies over 80% upside from here.
Over 80% upside potential. Okay, now let's look at the technicals, the chart stuff. What's the picture there?
Technically, the 14-day RSI, Relative Strength Index, it sits at 33.54.
Which is neutral, low.
It's pretty neutral, maybe leaning slightly towards oversold. It suggests that, maybe the selling pressure is easing off, could proceed a bounce. And liquidity looks strong. Daily trading volume is high, over 31 million shares. That's important for institutional interest.
What gives them an edge beyond just stacking up Ethereum? I mean, anyone with enough cash could theoretically buy ETH. What's their actual business advantage?
Right, good question. They run a sort of unique business model. It includes hosting mining rigs for others and also self-mining Bitcoin and other cryptos, not just ETH.
Okay, so mining operations too.
Yes, and they specifically mention proprietary thermodynamic management in their data centers.
Thermodynamic management. Fancy way of saying cooling. Why is that a big deal?
It's potentially a huge deal. Cooling is a massive cost in crypto mining, maybe the biggest operational expense besides the rigs themselves, if their system really is better, more efficient.
It lowers their costs significantly.
Exactly. No electricity bills, better hardware lifespan, more uptime. It could give them a real structural cost advantage and help fund that big ETH bet. Makes their scaling more efficient.
Okay, that makes sense. A strong operational base supporting the big strategic play. All right, let's unpack this. With that much potential upside, that 80% target, there must be significant risks. Where are the red flags? What keeps you up at night if you own this?
Okay, yeah. Here's where it gets really interesting. First, just volatility, pure and simple.
How volatile are we talking?
The stock has seen a 52-week high of $161 and a low of $3.92.
$161 down to under $4 in a year. Wow. Okay, point taken. Extremely volatile.
So if the price of Ethereum dips, and it does, often sharply, this stock is going to feel it hard.
Yeah.
Probably harder given the leverage.
Right, that concentration risk is enormous. Their whole value proposition hinges on ETH.
Precisely. Their revenue, their asset value, it's all tied to these, frankly, unpredictable swings in the crypto market. That's risk number one.
Second.
Still losing money. Yeah. Growth is strong, efficiency is improving, but they are still operating at a loss. And importantly, recent capital raising has involved dilution. They've issued more shares.
Diluting existing shareholders, so your piece of the pie gets smaller.
Exactly. It's a headwind for the share price, even if the company grows overall.
And technically, you mentioned the RSI was maybe bottoming, but where does the price itself stand? Support, resistance levels?
The current price, around $49.76, it's actually above a recent short-term resistance level of $40.65.
Which could be good, breaking resistance, or bad if it fails.
Right. It suggests potential for maybe an upside overshoot, continuing the momentum, but also makes it vulnerable. If it loses steam, it could easily pull back towards that $40 level.
Got it. Any other risks? Transparency, maybe?
Well, one final point is just the lack of really granular, verifiable public data on things like operating cash flow and specific debt levels in the readily available summaries. Adds a bit of uncertainty for deeper analysis.
Okay, so lots to watch. What are the upcoming catalysts, then? Things investors should keep an eye on in the near term.
Definitely monitor the quarterly earnings report. That's coming up in Q4 2025. It'll be key for seeing details on acquisitions and confirming that improvement in margins is real.
And the ETH holdings.
Yes, there should be an ETH holdings rebalancing update sometime in November. That'll show their progress towards that 5% target.
What about longer-term speculation? Rumors that could move the stock.
The biggest one is hitting that full 5% Ethereum ownership goal. If they announce they've achieved that within the next, say, 12, 18 months, that could be a major trigger.
And diversification. They hold mostly ETH now.
There's speculation they might start diversifying. Their Bitcoin holdings are tiny right now, only 192 BTC. Maybe building a multi-asset digital treasury like some peers. Spread the risk a bit.
Makes sense. And what about bridging the gap to traditional finance?
Absolutely. Keep an eye out for any strategic partnership or integration announcement. Teaming up with a traditional finance institution could open up totally new revenue streams or seriously boost their credibility as a custody provider. That would be big.
So, wrapping this up, we have this picture of Bitmine Technologies. Really rapid growth, this huge institutional ambition tied almost entirely to Ethereum. Analysts are mostly bullish with big price targets.
That, countered by just extreme volatility, the ongoing losses, the dilution risk, and that heavy reliance on crypto prices doing what they hope they'll do.
It really raises a fundamental question for anyone looking at this.
It does. Given those strong analyst targets and the whole strategic positioning, how much volatility are you comfortable absorbing? How much risk can you stomach to get that leveraged exposure to what they hope is a major institutional crypto breakout? That's the trade-off.